Good afternoon, everyone. My name is Jason Allen Jankowski, Forex analyst and trader. Today's webinar, Training for the Pro Traders Toolbox. This is my regular monthly training for those people that own a copy of the Pro Traders Toolbox, my proprietary trade method for selecting trades in foreign exchange. You don't have to own the toolbox to come to this training. And that is, a lot of times people will do that because they want to learn more before they actually decide if they want to make the investment in owning the toolbox, and that's fair. So if you have questions or comments about the toolbox at any point, feel free to put them in the Q&A box, and we'll get right to it. Chris says, hello from Chicago. Yeah, my hometown. Just talking about it yesterday with my fiance, and she wants to move back, and I'm very happy down here in South Florida, believe me. Okay, let's get right to work. First and foremost, I never know who's listening, so I always like to mention that trading in foreign exchange is considered a risk investment. It's not suitable for all investors at all points in time, so you want to carefully consider if trading is right for you in light of your personal tolerance for risk and your financial tolerance for risk. People can and do lose money. In rare cases, you might lose more than you invest. Opinions, market data, everything we talk about in here today is considered opinion. It's subject to change at any time. Okay, just want to mention just a little bit about me for you new guys. The toolbox is my proprietary trade method for selecting entry and exit points in Forex. And it's developed from my personal experience in the markets. And the reason why I think that's important for you to know is because I started in this business just like you did. I started as a customer in 1986 and lost money for years. And as I talk about in my book, The Art of the Trade, I describe exactly what I had to go through before the light went on for me and I began to make consistent gains. And I believe that my approach is different than other kinds of approaches you could use or learn about for one very important thing. It is designed or attempts to take advantage of the loser's psychology in the markets. One of the things that you'll discover if you spend enough time with me as a trader and working together to educate, work on some education together to see if maybe you'd like to work with me one-on-one or coach with me. The important thing that I make absolutely clear, and that is not negotiable, is that the only way you can win in a zero-sum market is if you take that money from another trader who is willingly participating. Trading is not about studying the markets. It's not about understanding what the fundamentals are. It's not about predicting prices. None of that matters. This business is about finding the loser and taking his money. Now, that process is not taught anywhere, and the reason it's not taught anywhere is because we all operate under this illusion. Most people operate under this illusion that the markets can be studied, the markets can be predicted, the markets can be analyzed, and what I came to discover over my years and years and years of losing money is that that's not possible. And I don't use any technical analysis of any kind anymore. And I use only my proprietary approach. Now, what I'm going to do today is show you some details about that approach and how to get the most from the signals. Now, the reason I wanted to just take 1 or 2 quick minutes and introduce myself to you brand new guys is because I think if you're not really aware of the background of the person who is creating a product for you, you really don't know if that product is bunk or not. Most people, the information that you can buy out there that's considered to be in the public realm to help you with your trading, most of that is garbage, and you wouldn't know that until after you've already wasted your time and money on it, right? So what I want to do with my coursework and my education and training and webinars is to educate you on what I think really matters and to help you understand that comes from a real genuine understanding of this business. That I'm the real deal, and if you're interested in really pressing the envelope to make the most money you can from your trading approach, you're going to have to change some things about how you think and about how you behave, and the toolbox can help you do that. So let's go ahead and get right to work. A couple of things about the toolbox that's important for you to know and I have the contact information up here. It'll run on 4 separate platforms, and you guys already know this. It'll run on Trade Navigator from Genesis Financial Technologies. It'll run on TradeStation, Multicharts, and MT4. These 3, TradeStation, Multicharts, and MT4, these are all considered industry standard products. And in order to run the toolbox on these 3 products, you need to get the files from codefortraders.com. What you want to do is take down the information for my programmer. He goes by the name Progster, and he's at progster@codefortraders.com or www.codefortraders.com. If you want to use the toolbox on Trade Navigator, I create those files for you. You need to call me directly. Any questions, call Genesis FT support, genesisft.com, or here's their telephone number. If you have any problems installing the templates, you need to call Genesis right away or Progster right away to make sure that you don't have corrupted files, and then of course we'll fix it right away. Inside each of these platforms, there's some basics you need to know. First of all, with Trade Navigator, don't use anything except the template that's designed for the currency pair selected. In other words, when you get a copy of the toolbox on Trade Navigator, it's going to have 5 templates, one for pounds, one for euro, one for yen, Swiss, and CAD. And make sure that you're using the euro template with the euro chart. Otherwise, your stops might be off a little bit. If you want to use the stop placement feature, you want to make sure that your stops are accurate. Also, you want to get the maximum data set for Genesis FT and make sure that that's installed for historical accuracy. The toolbox, the more data you can give the toolbox, the better it operates. On TradeStation, and there is a video on my website in the Pro Traders Toolbox section that'll give you details on TradeStation, Multicharts, and MT4. But using the radar screen on TradeStation, that's a great benefit. That's going to save some extra time. You don't need to use the radar screen function, but it will help you with understanding multiple time frames. On Multicharts and MT4, I found that the page creation and like your profiles on MT4, very helpful. And they have back testing features on Multicharts I thought were very helpful too. So I think if you're going to use any of these platforms, you're going to have a good product. But it depends on what you want to try to do. Each of these, Trade Navigator, TradeStation, Multicharts, and MT4, they all offer features and benefits, that are slightly different. But the toolbox will run on all of them, and it will provide you great signals. And there's some additional features or benefits that each of them has that can sometimes help you with using the toolbox. So before you buy the toolbox, make sure you've decided which platform you want to run it on. Okay, now regarding the signals themselves, this is what we're going to talk about today, and I'm going to show you some charts. Excuse me. You're looking for conflict and congruence between time frames. You could also call this confluence and congruence. I'm going to show you a few examples using the toolbox running on Navigator. In later broadcasts, you're welcome to come. We're going to be doing, I'll be using the toolbox in MT4 and all the other platforms as well. So if you have specific questions about those, we can talk about it then if you want, or you can ask those questions anyway and I can walk you through it. But for today, I'm going to show you Trade Navigator. And also on the website, guys, I've got videos there to help with using unique features of each of the platforms. So you might want to go ahead and have a look at those. And all of the training that I do is recorded and archived on the PTT training, the PTT page. So there's other training there that you might want to have a look at too. But in any case, what we're looking for is conflict and congruence between different time frames. Now let me ask you guys if you can see the 1 hour dollar Canada chart. Let me know when you got dollar Canada up there. Okay, a couple of yeses coming in here, so we got dollar yen. Okay. All right, this is a 1 hour dollar-yen chart. And as you can see, there are some signals on the chart. You'll also notice that I don't have any other indicators on the chart, right? I might have a little support and resistance line, but maybe the moving averages, but these are just things I like to have on there. You notice there's nothing else there except the toolbox signals. Now we got a question here real quick. Let's see, this was from Peter. He says, why does Trade Navigator have a specific file for each pair and other programs don't? That's just the way it's designed. You know, I'm not a computer programmer. I can't answer that question. Every software program has some theory behind how it works, you know, so I can't tell you why there's, you know, why Steve wrote it on MT4 or multi-charts or TradeStation the way he did. That's different than the template feature that Trade Navigator has. I have no clue why that would be. That's a programming issue. David says, Proxer said the algorithms are built into the code on MT4. Yeah, that's right. The reason it's built into the code is to make it unique to you. You know what I mean? So it will run on your platform. That's the whole idea. Make sure it's unique to you and it runs on your platform. That particular process of creating the code, that's what the computer guy does. You know, so once it's loaded and running, then you're going to get the signals if you run that template or if you run that software, if you run that AE. See, it's not, Trade Navigator doesn't have that feature. Trade Navigator is just you run a template on whatever chart you want. Whereas in MT4, you have to run an electronic, you have to turn on an analysis program. Well, I don't understand all that stuff. I can just tell you that Proxter will help you with it. And if there's any questions remaining about why it's set up that way, he can answer that. So make sure you have an opportunity to talk with him. Okay, on this particular 1 hour time frame, I'm going to show you what I mean by conflict and congruence between the signals by going up and down the time frames. Now, you'll notice that in this particular case, on a 60-minute time frame, the market is providing trend buy signals over here on the left and trend sell signals on the right. The green box is a strong trend buy. The green pyramid is a regular trend buy. You'll notice that they come on wherever they come on, and they can be on an up bar or a down bar. Typically, if you're going to look at a buy signal, the buy signals are less reliable when they're on a down bar. You'll notice this little blue box here. The blue box indicates a negation of the signal. By negation of the signal, what I mean is, it's not that the signal's no good. It just means you have a caution flag here. Whatever the algorithm decided on the previous bar as being important enough to give you a signal to buy, on the next bar, something isn't right about that signal, and it's suggesting to you to be cautious. You can take it off if you want. Some people do that. They get a buy signal, let's say, and then they get a negation. They take it off. Sometimes it'll save a lot of money. Otherwise, they'll miss out on an opportunity. Like over here, buy signals were generated with a negation, little bit of a blip lower, but then new highs by the end of the day. So, I mean, there's still opportunity to make money on the signals. You don't have to use the negation factor unless you want to. The sell signals, we have diamonds are the strong trend sells, and the inverted red pyramid is the regular trend sell. Now here's again a perfect illustration of how the negation factor doesn't mean the signal's no good, it just means be careful, right? So if you're the type of individual that wants to run tight stops, then it might be to your advantage to use the negation factor as a way to get out sooner than hitting your stop, right? And it doesn't mean that you can't then look at the market again for another sell opportunity or put the trade back on. It's up to you to decide how to use them. Now, when we look for conflict and congruence, I'm going to start by going up the time frames first. Here's the 120. And this right here would be considered very good congruence. You'll notice that at the left edge of the 60-minute chart, we had buy signals. I'll just put that up again real quick, right? Buy buy signals here, buy signals there. And then if we put the 120 up, we had buy signals at roughly the same time and price. So we have two time frames saying the same thing. You want to get long here, right? Also, you'll notice that the two time frames are in congruence on the sell side. And these signals here are the more reliable signals. These are when the Toolbox clusters signals or stacks them. In other words, the regular trend sell and the strong trend sell came on the very same bar. That's a stacked signal. Then we had the next 1, 2, 3, 4, 5 bars. Every bar had a sell signal. That's a cluster. Usually, clusters and stacked signals are more reliable. That doesn't mean that they always work. They're just signals. They're usually more reliable. Peter says the higher the time frame, the bigger automatic stop loss is generated. No. The stop loss feature is up to you if you want to use it. You don't have to use it. It's just an arbitrary number. If we go over here to Swiss franc, let's say. Well, I shouldn't use the word arbitrary. Let me rephrase that. It is an intended or suggested stop based on the algorithm. So here's your buy signals over here in dollar Swiss recently on a 60-minute time frame. And here is the stop prices underneath the market. Every one of the Toolbox platforms, doesn't matter what platform you're running it on, it'll have a suggested stop on the signal bar. So here's a signal bar here, here's a suggested stop. Every platform puts it out a little different, but right here, here's your suggested stop. If you look up here, right, it says buy stop, sell signal, 96.17. So if we take this buy signal here, the sell stop is 93.87, right? Now some people say, okay, if I buy the market here, and that price is, let me just move this out of the way here again real quick. If I bought right here on this buy signal, that price is 94.89. I don't want to run a stop all the way down here at 93.87. I don't want to run a 120-point risk. Well, that's up to you. You don't have to. But one of the things you'll notice is that the Toolbox will give you a lead more often than not. What you do with that lead is up to you. Sometimes you got to give it some room to maneuver. So the stops are where they are to allow the market to maneuver. Like right here, if you bought any one of these buy signals, you would have taken heat. You wouldn't have been stopped out, and the market would have eventually went to a high print that you could have used to lock a profit or roll your stop up a little bit to reduce your risk, any number of things. Same is true on the short side here. Here's an H and an X reversal and an H reversal. This is a clustered reversal pattern. Stops out of range, gave you a little bit of a lead, right? Another one here, stop out of range, gave you a little bit of lead. Actually, the best of all this through 4 signals, that's the best. If we look at the 180 chart, again, good congruence on the buy side and some congruence on the sell side. And this is the 240. Again, good congruence here. And actually, I think I took the sell signal last week, if I remember correctly. This particular sell signal here on dollar Swiss was congruent on all 4 time frames. So that would be considered a very strong trade potential. You've got 60-minute, 120, 180, 240, all saying you need to be a seller. The daily chart, of course, will also generate signals. The daily charts, as you can see, don't generate that many signals. So if you use a daily time frame, you may end up doing a lot of sitting around before doing any trading. However, the reversal patterns on the high time frames, the daily, weekly, and monthly time frame, tend to be more reliable. Here is a stacked XH reversal. 2 reversal patterns on the same bar, and that, of course, gave you a nice lead. On a weekly time frame, you can see that the market was looking for the low print for almost a year on a weekly time frame before finally finding the low. And that's very common on the H reversal. See H, 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 H. So here in a 12-week period of time, we had 4 weekly reversals with no joy on any of it till the last one, and then the market has been higher ever since for a whole year. So it's important for you to understand that the reversal patterns are more reliable on the X reversals and the blue diamond reversals, which are the E reversals. So if you're using an MT4, multi-charts, or TradeStation, your reversal pattern is the E reversal. And I'm going to show you that real quick on dollar yen. And I'm going to go to the 120 here. Here's a blue diamond reversal. The blue diamond reversal is considered the rarest, but it's the most reliable, or not the most reliable, but it's the rarest, and generally has about a 90% probability of success over time. The blue diamonds are often early. It's not unusual to see a blue diamond reversal, the market continue up to a high print, and then start the process of reversing. Like that's what I think yen is doing. Yen last week on Friday said it's all over. It's no longer a buyer's market, but the market hasn't stopped. It hasn't figured that out yet. You know, you guys you seen a chicken running around with his head cut off, right? The chicken is already dead. It just hasn't figured that out yet. Well, sometimes markets are like that. Certain types of signals say it's all over. You know, the market is no longer a bull market. Well, it might take 2 weeks for the market to finally figure that out, and in which case it might make a spectacular move in one direction when it does. So the exhaustion reversal or blue diamond reversal is rare, but it's highly reliable, and it's usually early, which is a great problem to have, guys. All right, if we go back to Canadian real quick. Okay, if we go back to Canadian, I want to go down the time frames now and show you what I call conflict. What you want is for the smaller time frames to show opposite signals to the higher time frames. And this is great conflict. Here's what I mean by conflict. The typical losing trader in this business is operating on a time frame of 30 minutes, 15 minutes, 10 minutes, 5 minutes, and they're not looking at multiple time frames. Now, you can use the toolbox on a 5-minute time frame, and it'll give you some great signals, and I'm going to show you right now what you want to accept and what you want to ignore on a 5-minute time frame if you're going to use the signals to find trades. But in the case of how to get positioned using the signals, what you want to see is the high time frames congruent. Like we've got in dollar Canada right now, a lot of sell signals that are all coming in at about the same time. 60-minute, 120, 180, 240, all showing sell signals at right about the same bar area, right? They might be 1 or 2 bars ahead or behind each other, but they're all at about the same time-price relationship. They're showing sell signals. So if we go on the smaller time frame, you're seeing buy signals. And these buy signals are late. 15-minute time frame actually is showing reversal signals, or buy signals over here. These were congruent with the other ones, the 30-minute. In other words, if you were seeing the 30-minute time frame, you'd see buy signals right in here, and the 15 minutes showing you some buy signals too. Maybe here's some sell signals. Here's a reversal pattern. It didn't really work. Here's another one. We'll see if that works. The point I'm getting at is that what you want is the smaller time frames to be in conflict with the larger time frames. Whatever the larger time frames have as a signal set, you might have a 60-minute chart, a 180 chart showing you a sell, and then 2 hours later, the 240 comes in with a sell. You're getting to a point where you've got a real good potential on the short side developing. Now you want to look at the 5, 10, or the 15-minute chart and see if where the sell signals came on the high time frames, if right in that area you start seeing buy signals. You know what I'm saying? Now, doesn't mean that you can't use the 5-minute chart and go long, right? In this case, we had more sell signals than buy signals. Of course, we're 3 times the distance now, so if we'd have to go way down over here. Yeah, see, there's some buy signals about the same time-price relationship over here, but then sell signals more active. In the case of using the 5-minute chart, if you want to be a 5-minute trader and you want to use the toolbox to help you find trades, Smart thing to do is go with the reversal patterns and ignore the trend signals. Just ignore them. Don't even use the trend signals. Go X to X. You see a red X, sell the market, put a stop that's reasonable, wait for a green X to show up, close your position and reverse. It's highly reliable. Here's an H reversal, a couple of X reversals here as well. Gave you a little bit of lead. Just ignore those trend signals if you're going to use it on a 5-minute time frame. All right, let's move this to here. Okay, so when we talk about the basics of the signals, what we're looking for is the high time frame, 60-minute, 120, 180, 240, daily, weekly, monthly. We want those to be similar signals at around the same time-price relationship. We want conflict on 5, 10, 15, 30-minute charts. We want those markets. Whoops, did we lose audio for a second there? We had a little bit of a little glitch in the matrix. Okay. We want the smaller time frames of whatever market you're using the toolbox on. You want the smaller time frames to be in conflict. Like I said, that doesn't mean you can't use the toolbox to work on smaller time frames. It's just that you're going to be most benefited from that by using the reversal patterns. Don't use the trend signals. Now, we want to take just a quick minute and talk about wrong-footed signals. Wrong-footed signals are buy signals coming on down bars that are trend buys. They are sell signals on up bars when they're trend sells. This big buy signal right here, this is a wrong-footed buy signal. Now, it doesn't mean that the trade is no good. It's less reliable. You want to use your common sense when you see that. When you see a strong trend or trend buy on a down bar, is that low print of that down bar, is that also congruent with something else you know to be consistent with the buy side? Maybe that low print is a 50% Fibonacci retracement. That's usually a very good place to be a buyer, in an up market. Is that a trend line that you've been very confidently following? You see what I'm saying? When you get a wrong-footed signal, that doesn't mean the signal's no good. It just means you want to be cautious and have something else that helps you to see if that signal might have a better benefit. Now, I'm not advocating that you throw all your technical analysis out the window when you use the toolbox. And I'm not suggesting that you rely on the toolbox without anything else. What I'm saying is use your common sense and best judgment as a trader. There's certain things that you as a trader, through your years of experience and effort, have been able to discover as being helpful. There's plenty of times when the toolbox is going to be real congruent with that help. Like a 50% pullback, the market had some low print, like a 4-year low, and then rallied for 4 months, and then sold off 50% in 2 months. That's a slam dunk on the buy side. That's a real high probability trade. Well, if you start getting buy signals on the toolbox and right around that area, maybe they're wrong-footed sell or buy signals or sell signals. That might be okay. You know what I mean? That might be okay to take them. So you want to use a little bit of common sense, a little bit of your own basic understanding about the market too, before you decide if you want to take a wrong-footed signal. When they're accurate, when the market is trending, when the market is really trending, you're not going to get a lot of wrong-footed signals. And if you do, they're going to cluster like this. You're going to get a buy signal, negation, another buy signal, the market's going to ratchet higher. Then you'll get another buy signal, like have 3 or 4 of them over 8 bars, and the market's net higher on all the bars. So that's a real good clue. Also, the toolbox signals are less reliable in ranges if they're trend signals. I'll give you an example. If we were to go over here to, let's see, right about there, I think. If we're going to go to using dollar Canada right here, we have a high print here with a reversal pattern. The market came down and eventually found its way to somewhere near some kind of low print area here. That's the bottom of a range. and then rallied, then came down to test the bottom of the range, went to halfway to the range. Here we are still grinding along sideways within the range until we finally broke out of it today, right? When the market is inside a range like that, a well-defined price area, and it's just kind of moving sideways in there, the most reliable signals are going to be the reversal patterns on either end. It's not going to be the trend ones. Those are going to come in the middle. This will happen 3 times a week. Buy signal on Monday, sell signal Wednesday, buy signal Friday, and the market's gone nowhere. I mean, you just chop yourself to pieces. So if you're going to use the signals when the market is sideways or inside range, it's establishing secure range. If you're going to use the signals, use the reversal pattern signals, because if the range is wide enough, you'll get really good signals on either side of the range. You want to ignore the trend signals down the middle. Okay, floor is open for Q&A, basically. Just to reiterate, the most accurate trend signals, when the market is in a trend and you get a trend buy or a trend sell, the most accurate are stacked and clustered signals. The most beneficial reversals are exponentials. You'll see a lot of those. Those are the X reversals. The blue diamond, which is also called the E reversal, excuse me, the E reversal on the other platforms, TradeStation, Multicharts, and MT4, they're rare, but they're usually very reliable, and they're almost always early. In other words, when you see a blue diamond happen, there's a real good probability whatever is happening is coming to an end. It might take 3 or 4 days, but that's okay. Being early is the whole point, right? So you might get chopped around a little bit, but you should be able to do okay on a blue diamond reversal. That's called an exhaustion reversal. The H reversals are often tested. In other words, you get an H reversal on a chart, it's not uncommon to get another H reversal from another low, and then another one from another low. So as the market is making some move into a low, it might have 3 or 4 reversals before finally turning. So you just want to use some caution when working with the H reversals. Sometimes they call the market high or low pretty accurately. Oftentimes when they do that, they are stacked or clustered with other reversal patterns. Like you'll have an HX stacked, and then a bar or two and another X reversal, or another H reversal, or both on a couple more bars, then the market goes south. That's your best reversals. It's rare to see H, X, and blue diamond on the same bar, but I did see it once. If you see an H, an X, and an E reversal all on the same bar, you want to load for bear, because that is probably a significant high or low. If that happens at a high print, you want to load up on that, because that could be the high the market may not see again for years. You know, so it's just food for thought. You want to be looking for the time frames, the higher time frames that have a similar signal when compared to your execution, right? You're looking for lower time frames to show opposite signals near or around your execution time frame. All right? That's what I call conflict and congruence. If that's not as clear as we could make it, we'll go through that again. The important thing really that you got to remember about the Pro Trader's Toolbox, you want to use some common sense and trade experience too, because the PTT is more of a guideline for helping you understand the underlying type of market structure, and the Toolbox is attempting to isolate changing psychology or validate consistent psychology. So it's doing things slightly differently than what other things are doing. But it's a guideline. You know, it'll provide signals on both sides of the market. Because basically what it's saying is, okay, if you believe a trend is developing, this is a great place to buy a trend or a great place to sell a trend, right? If you believe that the market is ending and it's going to reverse, this is a great place to go short or a great place to go long for the reversal. So it'll provide you signals on both sides of the market. You got to use some common sense, you know. Dollar index is at a, 9-month high, I think, today, traded there before selling off, right? If the Toolbox gave you buy signals on the hourly time frame, as the market is making new highs, it says go with that, it's making new highs, there's buy signals coming on, then it made the absolute high, and an X reversal or an H reversal came on, I would go with the H or the X. I wouldn't go with the buy signal, because you don't want to buy a 7-month high. You want to sell into a 7-month high, right? So you want to use a little bit of common sense, because the market will provide you signals on both sides. There's plenty of people out there are going to tell you that a market, if it's trending higher, just buy it. Buy high, sell higher. Well, that's wonderful as long as the trend is secure. If you don't know how to understand how to determine if a trend is secure, then there is a probability that you're going to buy high and sell low. You're going to be too late to the party. And so sometimes buy signals that are trend buy signals are late to the party. And trend sell signals are often late to the party. And it's up to you to try to determine if you want to trust the trend signals or the late sell signals or the late buy signals, or if you want to look for a reversal. You know what I mean? You've got to kind of try to determine that. I like to look for reversals to get my position on. Then I look for trend signals as the trade develops to add to it. And as long as those trend signals keep coming on, I'm going with it. If I see reversal patterns up, as the market starts to pay me some nice gain from being long a trend or short a trend, I use that as more of a caution flag. That doesn't mean I'm going to liquidate and go the other way. I'm just going to be cautious. I'm going to maybe move my stop up a little bit closer. I might take a little bit off, right? I might do a little bit of a retracement study to find out, well, if we get a pullback, it should never go beyond, this level area, and maybe do a fib retracement or something. So I get an idea about that reversal is just a little caution flag. It's not a change in trend. You know what I mean? So you want to use some common sense. And I think the way you do that is you start by asking, where is the loser, right? Always ask, where is the loser? Because the loser is the guy that's going to pay you. So you want to know what he's doing. Peter says, should I wait for clustered trend signals and not take the first one when it appears? That's up to you. There's plenty of times, if we go back here, there's plenty of times when the market will make, it'll have one signal and provide a nice move, like right here. This buy here at about 102.62. It had a nice move. It was only 30 or 40 points, but that may have been enough for you, right? Sometimes here's an H reversal. It's not clustered or stacked with anything, but it did give you a nice lead. You don't always get a cluster, although this market doesn't seem to want to cooperate with me real quick here. Here's a small cluster, two of them together. If you would have taken the first one, it would have been wrong-footed technically, because it was technically an up bar. The second one, you would have taken no heat on, so, it's up to you. There is no right or wrong way to really use the signals. They're just tendencies that the market has. If your tendencies are good and, you like how the signals perform, they make sense to you, and those tendencies work for you, then you're in great shape. Okay, here's my contact information. Some of you guys are brand new. We had a couple of people say they're brand new. So I want to make sure that you have access to my website and my email address. Here's my telephone number. I'm still the only guy in this business that answers his own phone. You can also find me on Skype if you want, Twitter, YouTube. I also have an Apple iPhone, iPad app. All you got to do is search iTunes, ForexEDU, or you can go to the iPhone app page on my website and just download it there. It's free. It does have some things in it that you can pay for if you want to, and it has other things that you can get for free. Just give me a call or give me a holler and ask me what you want to do, and I'll show you what I can and can't do for one-on-one coaching. Also, my mirror trading program is available. There's details on the website on that too. And you can also sign up for my weekly performance wrap-up and summary. This is where I take win, lose, or draw. Made money or lost money or didn't have anything done. I show my performance for the week on Friday afternoons. And the reason I do that is to show you how well I'm using the toolbox, how well my mirror trading program is doing, and to raise awareness for the other education that I do. So if you want to come, it's free. And it's Friday afternoon. You can sign up on the website. If you have any problems finding the sign-up page, just email me, and I'll try to get it out to you right away. Okay, Peter's got a question here. Let's have a look at this. And he says, the trend signals you use to add to a trade are on the same time frame you entered on, or do you also use lower time? I don't use lower time frames. I never use the lower time frame to find a trade. And I'm not really even looking to find a trade when I'm looking at the signals. What I'm looking for is a tendency, and I'm looking for reasons that I should be in or adding to a position. And of course, the best ones are that the market is developing congruence on a higher time frame. So if I'm using a 60-minute chart to find my initial trade, I'd be looking at the 60-minute signal. When the 60-minute signal comes on, I would look for that also to show up on the 120, 180, 240 daily, weekly, monthly. And it's not going to show up necessarily on the exact same moment or on the exact same bar. So if I get a sell signal on the 60-minute, I might put one on, and then I'm watching the 120, 180, 240, and if they start showing sell signals, that's a good congruency developing, and I want to go ahead and consider adding to the position. So I might go to the 60-minute, and maybe by then the market has gone from up to down, and I'm short because I got a sell signal. I'm getting bigger sell signals coming on the higher time frame, say the next day or the day after, and all of a sudden there's a trend sell signal come on the 60-minute, and that is, maybe after a little bit of a bounce off of, say, the weekly low. I would say that that's probably a good place to add to that short. So I might add on the trend sell signal on the 60-minute, and then wait for another day or two or three to see if any more sell signals come on the higher time frames. Dave says, I'm currently long pound dollar based on reversal signals the daily chart was giving and what I saw developing on the weekly. Can you expand a bit on how I can use the signals to roll up stops or even add? Would I use congruent lower time frame, 4 hour, 1 hour, or wait for more signals on the daily? Well, if you wait for signals on the daily, I wouldn't recommend that because you're not going to get very many. It's not uncommon for in a 90-day period of time, a daily chart only provides 3 or 4 signals. So if you got a signal to get long to reverse, let's say, and you got long, that may be the only signal for weeks that comes on the daily time frame. But the other time frames will provide you places to go and add to that position. You see what I'm saying? Well, when you said, and also your next question, David, here is, where is a good way to determine exactly where to place stops? We do not have time to answer that question today. Stop placement is, there have been hundreds and hundreds of books written about the issue of placing stops. One of the most frustrating things that all traders go through is they agonize over where to place their stops. They then go ahead and decide where they're going to place it. They get long a market, they get a nice lead, there's a little bit of a pullback coming, and all of a sudden they're stopped out, and then the market rockets away and they have nothing on. How many times that happened to you where you get into a position, you decide to protect open trade gains, you move your stop up a little bit, you can't figure out exactly where to place it, but it turns out to be the exact perfect spot for the reversal. And you're stopped out with a small gain just before the market makes some huge move your way, right? Why is that? Well, there's a million answers for that. But the point of the matter is that where to place stops, there's no 2-cent answer to $1 million problem. The toolbox provides a little bit of insight into where you might want to place your initial stop, right? With the stop placement feature, the generating the signal for you. But that's your initial stop. What you do after that is really up to you. The simplest starter answer, like the bedrock beginner level, how to handle stops, I would tell you is to keep your stops out of range. So whatever the range is for the time period in question, you want your stop to be outside of the range. So that can be whatever it is for you. You know, it could be higher or lower depending on how much risk you want to take, whether or not you want to work on a different time frame, daily, weekly, monthly, etc. So it's up to you. Joshua says an XR reversal, an X reversal on a weekly, daily, 4 hour, and 1 hour is a good sign. Yeah, if you got a weekly, daily, 4 hour, and 1 hour, all of those together had an X reversal. So maybe the 1 hour had an X reversal on Tuesday, the 4 hour had one on Tuesday night. The end of the day, Tuesday or Wednesday, you got an X reversal on the daily, and then on Friday, the market had an X reversal for the week. That's a slam dunk killer trade, man. You want to have something on. Absolutely. Chris says, which pair do you feel most comfortable trading with? Well, actually, they're all the same. You know, it doesn't. To me, there's no one that's better or worse. They're all what they are. You know, there's no benefit or downside to any one pair versus another pair if they're all in the top 5 major pairs. You know, I trade the top 5 major pairs because they're the most liquid. They're the ones that have the most definable price action, and the toolbox has very clean signals on them. So I trade the top 5 major pairs, but they're all great markets, and the truth of the matter is you only need one market. You know, as long as you got one market that you're comfortable working in, then that's all you need. You know, so it's up to you to decide what that is. But for me, any market's the right market. Okay, I'm looking at the clock here. We got a few minutes left, so if you guys want to take a few more extra minutes and discuss something, feel free. I don't know specifically what you want to talk about unless you mention it. I want to leave my contact information up here for a little bit so the guys that are new get a chance to write it down if you want it. And, of course, I want you to consider me your friend in the business. You know, if there's anything I can do to help you, feel free to contact me directly at this contact information. You can always email me through the website on the Contact Me page. You know, please have a look at what I have up on the web, some great data on there. And, of course, if you want to discuss your trading directly, that's what I'm here for. I don't see any new questions coming in. Does that usually mean – sometimes that means we're all done for today. You know, so today's been kind of a quiet crowd. So I don't want to get off the air until everyone has had a chance to have their questions answered. But if you guys feel pretty confident that we're done for the day, we can wrap up early and let you guys have the rest of the afternoon to yourselves if you like. This has been recorded, so if there's anything about this particular training webinar that particularly interested you or you'd like to hear it again, sometime in the next 12 to 24 hours it'll be up on my website. All you do is go to the Pro Traders Toolbox training or Pro Traders Toolbox page on my website. Scroll to the bottom of that page, and there'll be a little section on training webinars that have been recorded. So it's all there. I usually keep the last 3 or 4, you know. Okay, Joss has got a question here. He says, I found the longer time frames to be the most accurate, especially the 4-hour daily and weekly. Yeah, absolutely. The Pro Traders Toolbox is designed to provide signals in a manner that a professional trader would be looking for signals. Okay? Professional traders, net winning traders, are on higher time frames. So the signals will be more reliable on the higher time frame because that's just the nature of how winning is done in this business. So I encourage everyone who buys the toolbox to consider using the higher time frame signals. Like I said, that doesn't mean you can't trade the toolbox on the lower time frame, but if you do, there's a lot about the signals that's going to be random noise that you don't want, and I recommend you go with just the reversal, you know, signal to signal. That's usually the best way, but it's up to you. He says they're also good on shorter time frames, so if you're scalping, He says, scalping directional long-term trends. Oh, yeah. Well, yeah, if you want to scalp. But, I mean, scalping is the hardest money to make, in my opinion. I mean, why would you want to go in and out and in and out and in and out of the market 15 times in a day for a net gain of 40 points when you could put something on Monday and make 350 points by Friday and never do anything other than wait? You know what I mean? So I'm just not a firm believer in scalping or short time frame trader. Me, I don't think short-term trading is the way to do this. But that's me. Not everybody feels that way. Josh says, I don't do it. I don't scalp. Right. I don't think you should. That's me. David says, the higher time frame approach gives you an opportunity to get away from the screen and spend more time learning about microstructure, etc. Oh, yeah, absolutely. Well, the reason the higher time frames tend to be populated with winning traders, and the reason they usually reflect better educated, better capable people, is because those people know that it takes time for trades to develop. If you look at a market that has, look at the Dow. The Dow, when it crashed, its low print was somewhere like around, 66.50 or something? The Haynes bottom, whatever that was. It took the market 5 years to recover to a brand new, fresh, all-time high. Now, if all the conditions were there and all the participants were going to play anyway, why didn't the market just open the next day at a new high? Because that's where it was going to go to eventually. So what did it need the time for, right? Well, that's the whole point. It needs time for everybody to play. It needs time. I talk about this in my book, Time Compression Trading, about the relationship between how time compression and the illusion of price movement is due to the fact that time has to be consumed. So the market takes time to get to wherever it's going to go. If the market is setting up, like I believe right now, the euro is set up for a move, back to the highs by the end of the year. Now, why by the end of the year? Because it's going to take 6 months or 8 months for the market to come back to the 39, 40, 42 area. It's going to take that long. Does that mean I want to buy it right here and hold it forever? Probably not. It's going to be backing and filling. It's going to cover the same ground 3 times. I like to trade that. But it takes time. So if you want to sit on something and make the real money and spend years holding a position, which you could do, you're just going to have a much bigger understanding of the time element, and you have to have a lot more patience, right? So that's up to you. But the guy who's trying to make money right now, however he defines right now, like the next 20 minutes, that guy is never going to make $1 doing this. It's never going to happen. So his money becomes our money because he can't discipline himself to allow time to pass. If the yen has really set up for a near-term top at this 96 handle, if that's really happening, it could take 6 weeks to move back to 88. Fine. I'd love that trade. I would consider that a spectacular trade to make 600 points in 6 weeks. It's not going to go straight up or straight down, but you could be very successful in that market here to start the next quarter. So we want to give it some space, some room, some time. Dave says, most people are not patient. That is correct. Joshua says, I'm up 2,000 pips just this week, trading the 4-hour daily and weekly for much longer term positions. Yeah, well, Josh just bought the Toolbox a couple of weeks ago, and he's using it in conjunction with a retracement package that seems to be working very well for him. David says, I think I remember reading somewhere that you're working on getting a degree in psychology. Actually, no. I'm not interested in getting a degree in psychology, but I consider myself a student of psychology. Maybe that was a little confusing. A good book I'd like to recommend for you is Thinking Fast and Slow by Daniel Kahneman. You know what? Why don't you go ahead and send me an email with that data in it? He says, discusses many psychological illusions that people fall for. Right. You know what? One of them is, in this industry, one of the illusions is the illusion of study. David says, I will. Okay. Yeah, I'd love to see that. But here in this particular business, one of the illusions that people operate under is the illusion of study. And I talk about this in all my books, really. Excuse me. And I cover this in my Psychology of Trading class, is the relationship that people have with their own personal belief structures, that illusions are part of everyday life for most people because we never discipline our thinking process and we never take apart our thinking process and actually critically examine how we come to conclusions and actually look for illusions. In other words, one of the things I teach in my psych course is how we take exhaustive notes on what we're doing in the markets when we trade and we participate. And then we go back to those notes later when we're not in the market and we look for what we said in those notes that would be evaluations, assumptions, misconceptions, illusions, justifications, expectations, or exceptions, right? And most people are absolutely amazed at how many misconceptions, assumptions, illusions, exceptions that they operate under, and they didn't even know that they were doing that. And then they can begin to clearly see that that thinking process is what's leading to their losses. Now we can put steps, in place to prevent that behavior from happening, from losing behavior to happen. But most people operate completely ignorantly of how their own mind works and how their own mind is coming to conclusions. And that's why they almost always make the wrong choice. Almost always. I shouldn't say the wrong choice. They always make the best choice that they think they can make at the time, but it's not the choice that typically would benefit them. You know what I mean? They're doing the best that they can with the information that they have, and they're doing the best they can with the programming that runs on their computer, meaning their head. They're doing the best that they can. So they'll make the best decision or choice that they can, but they're ignorant of how that process happens, and because of that, then the choice that they make is typically not one that will benefit them. That's why people, marry, poor choice of spouses, take jobs that aren't that good for them, can't make money in the markets. It's all because their decision-making process is not cognizant of what's really happening, and therefore they can't see that they're operating with an illusion, a misconception, justification. It's fascinating. So I'd love to know more about that. That's the kind of thing that I like to spend time on. So please send me the details. Okay, guys, anything else? Any last-minute stuff we want to cover? Just drop it in if you want. I don't see anything coming in, so that may mean we're done for today. I actually saw one or two people drop out already, so that usually means that we're done because we're losing people. A couple of thanks and great jobs, and I appreciated taking the time. Great, so I guess we are done. Okay, guys, this is recording. Once the recording is converted, I'll upload it to the website, and you'll get a chance to download it. In between now and then, guys, have a great day, and consider me your friend in the business. Anything more I can do to help. Don't forget, tomorrow will be my PM wrap-up, and next week on the 21st, I'll be doing, a week from today, I'll be doing my Introduction to the Psychology of Trading course. We're going to be doing the psych course starting in April, and if you're interested in attending, I do the free introduction to the 6-week course, so you know what's actually involved, the time and financial commitment you got to make to attend the the 6-week Psychology of Trading course for Q2. So the free intro is great information. If you haven't seen it before, you're really going to like it. I promise you'll learn something. And you may find out that the 6-week course that's coming up here in April, starting in April, might be exactly what you're looking for to reach the next level of performance for yourself. So I'll have that intro next week, and hopefully you'll get a chance to come to that. So I'll have the email sent out over the weekend or early next week, and everyone will have a chance to come. So guys, thanks again. My pleasure to work with you. Anything else I can do for you, feel free to give me a quick call. You know where that my number's at and all that good kind of stuff. In between now and the next time we talk, don't forget to run your stops, and I will see you next week. Thanks.